This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. We're starting a fresh new week here on Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. Full 5-day working week. And then, the Monday after, you get a bit of a reprieve. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, morning. I'm getting good feeling about this week because we have some good numbers that the market will react to. ICICI Bank, top notch. Reliance Industries as well, better than expectations. So could this be the week when the market moves out of its range, right? Or out of its slumber? That's the question.
And it has been a slumber, right? For the last 3 or 4 days, it's been absolutely in a very, very tight range. Global cues, I'll just wrap up in one sentence. Not very much. Absolutely not very much. So it's lackluster. They don't provide any sort of guidance in terms of what comes next. So that's it. That's all that you need to know. Looking ahead, there are some earnings, big global earnings from the likes of Microsoft, Google, Amazon, Caterpillar, GE. So it's actually a massive week of earnings in the US markets as well. Let's come straight to what will be the mover here for today. What will be the decider? We had strong fourth quarter numbers from both Reliance Industries and ICICI Bank. And we'll discuss this in greater detail. But both numbers were a beat. Stocks, I've always said, move based on how much of earnings being upgraded by. In the case of Reliance Industries, while the outlook is pretty positive, there's not been very much of that. ICICI Bank, of course, has hit it out of the park, which means even though there are concerns that, in the case of ICICI Bank, deposit growth still lags HDFC Bank, etc., numbers have seen sort of marginal to meaningful upgrades across the spectrum. We'll come to that a little later. The total weight of ICICI and Reliance in aggregate is 18% of the Nifty. So we're talking about a large chunk which is, beaten expectations, and that essentially could be the driver today. All right, for the Nifty to come to levels, last Monday's range still remains very, very relevant, both the high and the low. Through the course of last week, the Nifty remained within that range, last Monday's range. On the lower end, 17,574 is that level, which the Nifty once again, by the way, held on to. It did not break that level. But we did see a negative weekly close. It was about 250 odd points worth, but it was a negative Friday. On Friday, it was a negative weekly close, which does kind of bring into focus, potentially, perhaps the market starting to move a little lower. On the downside, and this is a level which we've sort of highlighted before as well, 17,501 and 17,388 become the levels to watch out for on a break lower. We closed at 17,624. The SGX is indicating a higher start, so it's not going to come into play immediately. But if it starts to play out, 17,501 is the first level to watch out for. For upsides to be retained, the index needs to see a strong close above 17,863. This is nothing but Monday's high. Last month, 17th of April's high, which you need to see a strong close above. By the way, there is a bit of a divergence developing between the Nifty and the Bank Nifty as well. The Bank Nifty is still stronger. The Bank Nifty also saw a negative weekly close, but it was a very minor one. On Friday, the Bank Nifty was down some 14, 15 points or so. So can't really say anything conclusively. It's been the stronger of the two indices in any case. And of course, with ICICI Bank numbers behind it, perhaps it could act as a tailwind for the overall market. In terms of levels for the Bank Nifty, 42,603 is the level that the market needs to take out on the way up. That's 42,603. And Monday's low, which was 41,799, is the important level to defend if there is, at some point there is some selling which starts to emerge. But, those are levels, etc. A lot of it will depend on how those two big heavyweights, Reliance and ICICI Bank, behave today. And it's going to be about earnings in a very large measure. Sonia.
Oh, absolutely. And, the SGX Nifty is indicating that the start will be well in the green, right? Yeah. So I think the street likes the fact that both Reliance and ICICI Bank have delivered a good set of numbers. ICICI Bank was top-notch. There were no complaints at all over there. And remember, ICICI Bank has actually done nothing this year. Of course, the Nifty is down this year, down about 2%, while ICICI Bank is flat. So in that context, the stock has outperformed the Nifty, but it's done nothing for investors this year. So could this be the moment when, it starts to sort of perform? Net interest margins at an all-time high, highest ever quarterly profits, so no complaints there. On Reliance as well, it was a beat pretty much on all parameters. A very strong oil to chemicals business And the good part is, despite having a very high capex plan, their net debt was actually flat quarter on quarter. So that's something that the street liked. A lot of brokerages have gone ahead and raised estimates marginally on Reliance Industries. So these are two companies that could keep the markets alive. Wipro as well has they will be considering a buyback on Thursday. That's something that the street always likes. So Wipro too could perhaps be in the green. But a couple of things that I'm watching out for. One is there was large selling by FIIs on Friday. So, does that keep a lid on the market's gains? Over 2,100 crores of selling is what we saw in a single trading session, while DIIs bought about 1,600 crores. And this is a big week of earnings for the Indian market. So today we begin with IndusInd Bank. There are a lot of auto earnings coming out. There's Bajaj Auto, Maruti Suzuki. Through the course of the week, you have Axis, Kotak Mahindra Bank, HUL, Tech Mahindra. So it could be the deciding factor for the market. For now, just these two earnings, Reliance and ICICI Bank, do they move the market out of its range? Maybe not. The street will definitely give a thumbs up to these numbers, but it's been a very tight range for the market, and FIs continue to sell. Global cues were not that great on Friday either. So maybe we could continue to maintain the range, but within that, some of these pockets could do well.
Well, that's right. Sonia, the FI selling has been intensifying. So what started off like a few hundred crores has moved to around 2,000 crores odd. So hopefully, given that we have some positive news flow on large weights on the index, hopefully that cools down a little bit today. But a fresh breakout will come on the Nifty only once we get past at 17,850. On the top weights that I was talking about, there are 4 stocks that will be getting, that will be reacting to positive news flow. You got the HDFC twins in there, Reliance Industries as well as ICICI Bank. ICICI Bank, the positive was their numbers, blowout numbers out there, looks quite good. Reliance Industries, well, for the first time they mentioned that the net debt to EBITDA, the target is to keep it below 1, and the street likes that, despite the big investments they're looking at. And also, I was reading a note coming from Jefferies. They're saying that there's a positive read-through even for Bharti Airtel, because the ARPUs were more or less flattish. For HDFC twins, well, the RBI dispensations, well, they are paving a way for a smooth merger. So those 4 stocks will be reacting to positive news. At least you don't expect them to be sharply in the red. What do the FIs do? Well, they added close to around 5,000 long contracts or thereabouts, just close to around 2 longs for every 1 short positioning. The short positioning has come down to around 61%. Remember, when we started the series, it was more than 90%. So fair bit of that short covering has taken place. On the index option side, well, they seem to be hedging themselves because, yes, they're going long on, the index futures. But what's telling you there'll be a bit of a lid on the markets is the way they're writing calls. Even in Friday's trading session, they wrote close to around 2 calls for every 1 put. And what were they writing? The 17,700 call. The open interest there is more than a crore odd. And there was aggressive writing being seen out there. On the downside, 17,600 put as well. There was some writing. And the premium on both these 2 strikes is identical at around 55 rupees, which brings us to the near-term range. Since the 17,600 put is getting written, support comes in at around 17,550. However, there's a very, very stiff resistance in that vicinity of around 17,775 to around 17,800. This is the near-term range. So that's the positioning. But the trigger today is going to be the Nifty Bank. You have 2 large weights in there that are reacting to positive news flow, HDFC Bank and ICICI Bank. Well, you need to get it past that 42,600 odd mark. And last week, we attempted that. Twice in the past 5 days, we went to those levels, but that did see selling. So the key today will be the Nifty Bank opens in the green, but can it hold on to that green is going to be crucial. If that can happen, then you'll gradually see that move towards that 17,775 or 17,800 odd. So let's see how it goes. SGX will be suggesting a green start to the tune of around 40 to around 50 points if you compare it with the Nifty future. So interesting times.
Nigel, so individuals make up the whole. So Reliance, ICICI,
35% of,
so that's going to be important.
By the way, 20% of the Nifty components report this week. So this week is also a really heavy week for us and lots of big numbers to track.
Absolutely. Well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Ed Yardini of Yardini Research will join in to discuss the global trade setup. Our research team will bring you CNBC TV 18's list of top 10 stocks for the day. At about 8:30, we do a fundamental stock analysis with Prakash Diwan. That's the lineup.
All right, so we have a lot of views coming through. And first up on the show, we have a comment from Gautam Dugar of Motilal Oswal Financial Services. He expects the markets to remain range-bound and trade with a positive bias. He says ICICI Bank results were picture perfect and it remains their number 1 preference in the banking space. He says Reliance was slightly better than their expectations due to the lower tax rate. He also says the stock has corrected, hence Reliance offers a decent risk-reward ratio. Gautam adds that this is a week of heavy results and amongst the lot, they like Axis Bank ahead of the numbers And they will also watch Maruti very closely to get some auto sector trends.
Well, let's get you some money market views on the rupee. B. Prashant of ICICI Bank says dollar remained under pressure as early signs of labour market weakening emerged. Asian currencies were broadly range-bound and will take cues from this week's Bank of Japan policy decision. Last week, rupee traded in a narrow range, around 82 to a dollar, where RBI was seen accumulating reserves against the dollar inflows. Prasanna has a positive outlook for the rupee in the midterm and expects USD INR to trade between 81.6 to 82.4 to a dollar this week with an appreciation bias.
And on the bonds, B. Prasanna says that global yields softened despite a hawkish reiteration from the Fed members as incoming data continue to point towards slowing down of economic activity. Domestic yields moved lower as well, taking recent action by the RBI as a pivot instead of a pause. He expects the bond markets to trade with a positive bias and the 10-year benchmark yield to trade within 7.10 to 7.25% range.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Reliance, ICICI Bank, HDFC Twins, as well as HDFC Life, Macrotech developers Wipro and Mapma India. They're back on the back of positive news flow. But on the flip side, Sun Pharma and Yes Bank will be reacting to negative news flow.